Hello, everyone, and welcome to TradeFinder Live. It's great to be back. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, as we know, we are live streaming. Well, for any of us that have been around for some time now, we have been live streaming to multiple different platforms. And so Rob goes through his general presentation, goes through, excuse me, some case study considerations. And with the time remaining, we funnel in some questions from all of the live streaming platforms. So as you'll see circled on the screen, the only method for that is going to be through the Q&A window. At any point throughout the session, please feel encouraged to write your question in that window. Again, just make note that we are only going to have a limited question portion at the end of the session. So if we don't get to your question, just note it has nothing to do with the validity. We just only have so much time. With that, take it as encouragement to attend the Insiders meeting, which takes place every Thursday, and that's for paid subscribers only when there's a 45-minute Q&A portion. So obviously a much higher likelihood of getting your question addressed there in that session. Lastly, we have the chat window as well. Any support related queries I can handle in there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. By default, for our host audience, it goes to host and panelists at the bottom. So if you would like everyone on the webinar to see your message, be sure to change the to everyone. All right. Well, there's been more Fed talk and same hawkish tone that's been going on for some time, and the market seems just to kind of move on and not really care too much. So I'll be interested to hear Rob's thoughts on that, and very excited to be back with you all. Thank you for joining us for this live session. And at this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
Hey, everyone. Thanks, Zach, and welcome to our very first TradeFinder of 2023. Hope everybody enjoyed a wonderful holiday season. I did go up to the mountains, as you can see here in a moment when I turn the camera on. I am in the Dragon capsule. I'm going to get back to that in just a second, but over the holidays up in the mountains experienced the coldest temperatures I've ever had in my entire life with that Arctic blast that came down -9. So that was rather interesting, and learned that when you go into negative temperatures, any part of your skin that is exposed to the elements burns. It's so cold that it burns. But anyway, with the Dragon capsule thing, we got the Dragon capsule coming back to Earth, undocked from the space station. And then yesterday, SpaceX had another launch for more of the satellites. So all kind of stuff going on. They're going to wave at each other, I guess, the satellites and the Dragon capsule up in space. But taking a look at where we are with TradeFinder. If you're new, welcome to everyone viewing us on the live streaming services. If you're brand new, we do talk about the market. Zach already went through the Q&A part, so I won't go through that, but we'll do a review of any alerts that we did for our subscribers, and I thought I would do a bonus one since it's been a couple of weeks since we've been together. By the way, thanks for some of you that said, hey, where are you guys? We missed you. Just took a little bit of a break over the holidays. And then we'll look for a case study consideration tonight, and we'll review case study considerations that we've done in past. Pretty interesting. There's only a few of them that will be considered open. If you're new to TradeFinder, I invite you to go back and look at some of the past TradeFinders on YouTube. You'll see that the track record of finding case study considerations is pretty darn good on our TradeFinder broadcast. So with that, let's go ahead and move to the markets. Most interesting thing today was not Chairman Powell speaking, as Zach said. They're hawkish, and more people are feeling like that they're going to overdo it. As I talked about months ago, was my feeling, but regardless of that, the market seems to be shaking that off. But the key here is look at the chart. We got a relabeling. Remember, we've been waiting on that. In fact, if I walk the chart back just a couple days, as a reminder that we had that disqualified 5-wave pattern to the downside. We're waiting for a relabeling, and it did, but it's relabeling in the fact that we still don't know what's going on. So we have a couple of qualified patterns that we can look at now. Both of them are zigzags, so we can take a look and see what this looks like here as far as a large one. So that would be a significant move lower, which, by the way, if you've been listening to the talking heads, they're all over the place. They have no idea what's going on either. Some are saying that there's going to be a significant move to the downside. It's going to take out these October lows, and it's going to start this week. That's how specific they were. Others are calling for a 50% rise in the tech stocks, which would mean take a look at the Qs, which we will in a minute. But we also have a qualified upward zigzag right here. And so that would go along with the upward forecast. So again, you can see why nobody still really knows where we're going to go from here. We're waiting for a little bit more clarity, even though it's like Elliott wave is saying, hey, we're not sure right now either. We're not in a 5-wave pattern, but with those two qualified zigzags, we're still kind of more in wait and see. So we've been picking and choosing what we do here at Elliott Wave Options, and you'll see that when I show you the trades that we did over the holidays. Just kind of quick ins and outs is what we're looking for. I think that's the thing. So as far as taking this zigzag off and just looking from a pure technical standpoint, there's the 10-day moving average. You can see it's trying to break above the 30. That would be interesting. And talked about this with our insiders on last Thursday night. This was really surprising to me that the market did absolutely nothing over the holidays. The Santa Claus Rally didn't happen, which is normally the move to the upside that occurs between Christmas and New Year's, because the market tends to drift higher. There's nobody there. Never short a dull market. It's an old expression. And so the market tends to drift up during that week because of such thin volume. Didn't happen this year. Nothing happened. And then the New Year started. We come back. Everybody's back to work, and still nothing. Just over the past couple of days, we're trying to make some sort of an upside break. We've got a little resistance here at 400 if this upward move continues. If we break above 400, then I think it's pretty clear that this recent upward zigzag pattern. For those of you that were in our zigzag mastery class, hopefully you're looking at those patterns and saying, yes, I see those, because that's the idea, is to get you to see different things when you begin to look at the charts, especially when we're in the mode where there's not a qualified 5-wave pattern at the time. So you start looking for the corrective patterns. So we'll see if we can break above 400, then I think we go long. And if we don't, if we hit resistance there and break down, then I think you have to respect the opportunity to come down and at least test these lows, even though I guess, as I mentioned, some market pundits are calling for new lows, recession. I think a recession is a given, but how significant has the market priced it in? All those things come to be, and I think the market has priced in a mild recession. I don't know if the market has priced in a deep recession, which concerns me. Let's get an update on the yield curve. We hadn't looked at that in a while, and you can see it is starting to come back, but it's still inverted. But it's getting better. It's still inverted, but the long end is trying to tick back to the upside, which is really interesting with our Toll Brothers alert that we did, or case study consideration that we did just before the holidays, which is worked really well. If you decided to follow that, you're pretty happy. So not much else to say about the S&P. Let's take a look at interest rates, and then we'll get into the other markets and get caught up there. Interest rates coming back down. Now, this is where you get into that dichotomy situation. Is that because people are viewing, or the market is viewing, the bond market is viewing, that the Federal Reserve is near the end of the rate hike cycle and perhaps looking towards the next cutting period? Is that why it's going down? Or are people really concerned about this upcoming recession and money's moving into bonds? So, we always want to present both sides of the argument. Notice that there is a qualified zigzag right here too, in the bond market, right at the 61% fib level on the B wave correction. And so that would bring us down past where this current wave 4 is, if that zigzag plays out. And we'll know soon, because if we take out these lows, which we're so close to right here, I think we go down there, and that's what ends up happening. But this wave 4 is going to try to hold, because it's right in that 50% to 61.8%. And you can see how we consolidated right there, and then interest rates move back to the upside, but now they're right back down again already. So, just still a lot of uncertainty with where we go. Looking at the bond market as a guide, the bond market's a little confused too. We do not have an upward zigzag, so that's something to think about. This could be forming a flat here, but that's a pretty well-formed downward zigzag, which would imply that rates go lower. But again, why? Why are rates going lower? Is it the view of rate hikes ending, or money is running there to hide? That's the key. And the same thing is going on with the dollar. Look at this move to the downside in the dollar. Now, this is good. Remember, I've talked, just to remind everybody, and for those that are new, and by the way, if you are brand new tonight, welcome, and please view our website, our channel on YouTube, Elliott Wave Options, and you can see some of these past broadcasts that we've done. But I'm a fan of a strong dollar, but not as strong as the dollar got, because that was not conducive to good profits from international companies with the exchange rate conversion. And then we look here, and the dollar has come down nicely. And as long as we stay above, my concern would be if we were to break below this area. And you might be thinking, well, why would that be a concern? Well, we want the world to view the dollar as the last bastion of support, because we're so far in debt. And so if we start to lose money coming into bonds, we start to lose support for the dollar, et cetera, we've got some real problems here in the U.S. with the amount of debt that we carry. But we got a little bit of support right here. Maybe we try to hold this, but this 5 wave to the downside pattern, the wave 4 is right at the 23.6% fib level. Remember that Elliott conceded that, okay, that's a fib level, so it counts in the algorithm. It's labeled in the 5 wave pattern, but he really preferred a 38.2% corrective move feeling that the 23.6 is kind of more of a continuation of the big impulse, in this case, the big wave 3 impulse, than a significant corrective move. So he would be suspect of the bounce, with only going to the 23.6 and feeling like, hey, there may be more downside to come. And, hopefully there is. Just again, let's hold in this 96, 97 area. That's what I talked about. Gosh, what, a year ago now, or getting close to a year ago. That was the level that a break of that level would be concerning to me. But anything that stays above that is okay. Getting as high as we did was not okay. But boy, did we nail this LA wave pattern here on the way to the upside on the dollar. So if you're a currency trader, man, I hope you were following Elliott wave while you're making your currency trades, because it's just been absolutely dead spot on. All right, so looking at some of our other markets, let's see what's going on since we relabeled in the SPY. As you know, we've had this period of time where we've had 3 different markets with 3 different patterns. And so here we have this Dow pattern still in the 5-wave pattern, the wave 4 right there at the 50% level. You can see this consolidation that occurred, not surprising there at 330, because it was such a area of support resistance. There's the sideways for a couple weeks there on the Dow, and with the wave 4 at 50% and all that consolidation, it's trying to make a move to the upside. And so here, if we could break above, you kind of lean a little more bullish on the Dow because of how well formed this pattern is, especially when you're breaking up from such a long consolidation. But the more conservative approach would be, all right, let's break 345 on the DIA, and then we feel more confident. Or maybe you're a little more aggressive and you say, hey, that pattern looks really good. We're trying to break to the upside here. I'm going to go ahead and give that a go. And then let's see what's happening with the Qs now with this break, because remember, they're the ones that have had the qualified downward pattern, and look what happened. No more. Isn't that interesting? Relabeling on the Qs. No longer do we have a 5-wave pattern to the downside. What does that mean? Well, we've talked about this. When the Fed does, whenever it is, and the minutes came out over the holidays where they said that, the minutes showed that not a single Fed governor felt that there would be rate cuts in 2023. I felt like maybe towards the second half, the rate hike cycle would end by summer, and then we could have that scenario where we go from a rate hike to a rate cut. So I still feel like there's a possibility of a rate cut in the second half of the year. But none of the Fed governors, at least at this point, do. Zero. None of them, not one, felt like there would be a rate cut in 2023. They're still really concerned about inflation, the strong jobs market, et cetera. But isn't that interesting that we no longer have a 5-wave pattern? So remember we talked about this, that this bifurcation or whatever, where we have 3 markets and 3 different patterns just won't last. They'll eventually come together. Well, they're starting to try to. Now we have the SPY and the Qs both relabeling to similar patterns, where they show the previous wave 5 ending in June, and then in kind of no man's land here, waiting on the next impulse pattern to show itself. Now, no qualified zigzag here to the upside on the Qs, but some significant basing right here at 260. My point when I got a little off on a tangent there was that I feel that when the rate hike cycle does end, the Qs is going to be the place to be. Now, the people calling for a 50% rally now, I think that's a bit early and maybe a bit strong. But obviously, the Qs have underperformed, as we knew they would, and that's going to be the place to be when the market does turn and start to move back to the upside. Is that what we're doing? Are we setting ourselves up for that? And as long as you stay above 260 on the Qs, you could consider a speculative trade going long. If you're right, going to be really rewarded, because it could be a real significant move to the upside. Your stop loss is 260. If it breaks 260, you're out, at least on an upside trade. And then you reevaluate and see if if it warrants going lower. Because look, there's like nothing there. You go back all the way back to 2020 with the 260 still acting as support back in July, August there. And then the move up there was this nice 45-degree angle. That's the kind of market move I like, as you know, but it doesn't provide any sort of resistance. So if we do break 260, we could go lower, but it's got to. Can it do that? I mean, it's such a strong level of support. Do you see what I mean? Where you could be a bit aggressive here if you wanted to take a shot at an aggressive move of going long here. A break above 280 and you could be off to the races. That could be what ends up happening here, is that we stay a little range bound. 260 is support, in the 280 areas resistance, 280, 290 right in there. But you break above 280 and you're off and running. So if you want to be slightly more conservative, let it break 280 and then go long. If you wanted to be aggressive, then you take a shot now, again with 260 as your stop loss to the downside. But pretty interesting, I think, on these relabelings. So, we were quiet over the holidays, but we're getting some changes. Same thing, relabeling on the IWM. All this stuff is occurring, but what hasn't changed on the IWM is we're still in that 170 to 190 channel, with 170 being support, 190 being resistance. Nothing else changed there. A little bit of a move to the upside on the IWM today, pretty interesting. But as you know, nothing matters unless we break 170 to the downside or break 190 to the upside. Other than that, we're just churning and staying within this area. Bitcoin is trying to find a little bit of a bid. So take a look here and see how it's trying to tick to the upside there. I'm going to spread this out and take these moving averages off, but you can see it's trying out of this extraordinarily long base, and we're going to get towards that Bitcoin halving thing that they talked about. We talked about that last year. I think it actually occurs in 2024, but the market will, as it does, always start looking towards that ahead of time. So you would expect a bid to come into Bitcoin before the halving actually occurs. Is that starting? It's a little early, I think. So I would be suspect of this move where we're starting to tick to the upside here, but it is interesting anyway. Maybe it's the end of this year. I'm not sure exactly when that is supposed to occur, but time's ticking by and we're getting towards that. And you could start to see some money start to come back into Bitcoin. See how it's trying to break above the 50-day moving average. You could say it kind of did that, and see if there's follow through tomorrow. Two pretty nice up days there, breaking from this. And boy, wouldn't it be interesting to see Bitcoin make it back to 20,000 again. That would be quite interesting. So you can see there's some gurglings here. I always use the analogy of the lava underneath the volcano, and that kind of plays out with this long consolidation here. Are we trying to make a break to the upside? Hard to imagine that if the market is going to make new lows, as some were saying today, that Bitcoin is going to take off and run to the upside. It seems like it's going to need a decent market from a risk to reward standpoint for the market to move higher. Looking at Australia, you take a look here at the EWA, and you can see that kind of a nicely formed five-wave pattern to the upside here in the Aussie market now. A nice doji there at the wave 4, right at 50%, moving higher. We're at the area of resistance here at 23. So this one's a pretty easy trade if you want to be long on the Aussie market. And this is a relabeling because this was a downside pattern. So notice that these relabeling things, the more bearish scenarios, the more bearish patterns are gone. So they've either relabeled to corrective patterns without a wave 5, or in the case of the EWA, we've relabeled to the upside here. And then we've had a lot of people saying, can you show the XJO too? And so we've started doing that. We're showing them both now. And you can see this one already had a 5-wave pattern to the upside. So that was interesting that the XJO had an upside 5-wave pattern when the EWA had a downside, but now they're both agreeing, both of them in a bullish upside pattern. But the EWA breaks above 23, you get super interested in the Aussie market, and I think that could be a really good long trade at that point in time. We have barely hanging on here on the EWC, right at that level, right at the last fib level, the last bastion of support here from a fib standpoint is 78.6 on the wave 4. It's trying to hold that and move to the upside, so it's still qualified, but I like that analogy of like you're hanging on the edge of a cliff with your fingernails. That's what the EWC is doing in this wave 5 pattern, but it's still there. It's still technically qualified. Let's see how India is doing, which for the long time, as you know, had been holding in pretty well. It's kind of non-committal now. So it had been doing really, really well, but now we're in between. It's in the same scenario as the SPY and the Qs now, to where we have this wave 5 that ended in June. And now we're going through these corrective moves and trying to figure out where's the next move from an impulse standpoint going to be. And you can see here, a real big flat is basically what we have here on the INDA, and it came down and tested that level of 41. And if that's going to hold, we got a little doji there today between the 10 and the 50-day moving average. See if we can break back above the 50-day moving average, and then you can see from the charts what has to happen then is we got to get above 44. So can it, you know, this is almost like the IWM. Nothing really matters unless it breaks below 41 or breaks above 44. Are we going to start another flat, or is that going to be it? And we'll know soon. So there's some clarity coming from just the absolute nothing makes any sense when you have 3 markets and 3 different patterns. We're not in that scenario anymore. So I think we're setting ourselves up, and I told our subscribers this. I feel like this is going to be a really good year from a trading standpoint. I think we will get some clarity. The Fed at some point will stop raising rates. Who knows when that'll be, but at some point it will. I think we're going to have some good directional moves, some good impulse moves, and it's going to set up really well from a trading standpoint. I'm super excited about this year after the last couple of years have just been extremely difficult from a trading standpoint. Now, how about this for a sign? You know, the market has been such a disaster. This, I think, goes towards what I was talking about with the Qs, that if the market does start to move to the upside and the Fed rate hike cycle is on the horizon, the end of the rate hike cycle is on the horizon, the Qs are going to be the place to be where you're going to get the biggest bang for your buck. Well, the EWG, the German market, as you know, if you were following along with us for over a year, was just 5-wave pattern after 5-wave pattern after 5-wave pattern to the downside. It was horrible. Look at that now coming back. So again, money moving in there early because it's been hit so hard. That's where the easy money is. The shorts will have to cover, etc. And we're getting awfully close to that wave 5 target there. We're at 38% on the extension. So maybe we get a little bit of a resistance area there, but sure looks like we're going to hit 28 on the EWG, and then we'll see where we go from there. Something to note, that wave 4 again, right at the 23.6% fib level. So Elliott would be saying, you know, this could possibly relabel and not all be one big wave 3. That would be interesting, wouldn't it? So we'll see how that plays out over time. But wow, lots to talk about. And so I think really interesting from the market standpoint on what's occurring there. So I want to show you a couple of our alerts that we did. So I'm going to throw in a bonus one. This was in our speculative portfolio. We did this on Tesla because of the fact that it didn't follow the rules of our 3 primary portfolios. We have our impulse portfolio, which is directionally based. We have the volatility portfolio, which, by the way, we've sent new alerts out. Again, the market consolidating, the VIX coming down. Ideal scenario for setting up our strangles out of triangle patterns. So that's been exciting to have those showing up again. And then we have our time strategy, which is the AI-based strategy, looking for capitalization on IV and time decay. But when you find something that's just like, that just looks like a trade, but it doesn't fall within the rules of one of those portfolios, we put it in our speculative portfolio. And in this case, Tesla just looked oversold. Look at that. It was a 5-wave to the downside. It was right at the bottom of the tap box there. So at the end, kind of got a little vertical there, separation from the 10-day moving average. Just everything was screaming Tesla's oversold. And so we went long, bought calls, as you can see, and 1 day later, 33%. Kind of my thing is, if you can get 30% in a day, we're going to go ahead and take that. And so perhaps, Tesla moves higher. Who knows? We'll wait and see. But we were looking for a bounce, and it gapped up. So we got the gap up, bounce. It still was a tiny bit oversold, but not nearly as bad as it was. And so, again, you can get 33% in a day. We're going to take that. So that was one of the alerts that we did over the holidays. And then we did this one on American Waterworks. And you can see that this was in the impulse strategy. So this was an impulse pattern. And you can see right there is in the wave 5 of a 5-wave pattern to the upside. Got a supportive DMI setting up there. And it moved nicely to the upside. And another short-term trade that we generated again. Look at that. Boom. Right straight to the upside. And now we got a little bit overbought, a little separation from the 10-day moving average. We're right at a resistance area here with the wave 3 and resistance from August. I don't know that this is done going up. The pattern looks really good. Look at that, 39% wave 4. So we're going to keep an eye on this. It just got a bit overbought. We actually exited near the high of that bar, you can see, and it sold off after the alert went out and we closed it out. So it recovered back down. But in that one, we generated 36% in 4 days. So you can see quick ins and outs, just picking our spots. I think that was the prudent thing to do. And I still think it is, while there's still some indecision in the market. So if you ever considered being an alert subscriber, I think now is a good time, because it's going to be a fun year, I believe. I think it's going to be a good year from a trading standpoint. Now, looking at our case study considerations, and the difference is in TradeFinder, if you're newer, we look for a case study consideration and then you're on your own. From that point, you find a trade, do whatever you want to do, stay in whatever. We monitor them, we just look at the patterns, but you're on your own from a trading standpoint. At our alert service at EWOtrader.com, we send out alerts to our subscribers on entries, any adjustments, and exits. So we kind of hold your hand through the process, where you're on your own in TradeFinder. That's the difference if you were curious. So here was Monster Beverage that we looked at. This is back to, there's only 3, November 22nd, and just kind of churning water here. This one's going to be interesting to me, I think, because we talked about this being in a sector where money could go to hide if the market got a little bit weaker. It's in one of those categories where beverages, people are going to find a way to eat, drink, and smoke, right? So the Sen stocks, etc. But just kind of churning sideways. Now, if the market does start to rally, will this rally with it, or will it fall apart? I think that's going to be interesting. But as we talked about 2 weeks ago, as long as it stays above 100, you stay long. Netflix, we looked at that one on the 13th of December, and it did back off a little bit with this gap down, but look at that, a nice move back to the up. So right back where we were. So no harm, no foul. We're right back to where we were. So I think you stay with this one too, if you've been long it. We talked about it needed to hold this area here at 280. That was kind of the key. Likely going to come up and fill this gap. Well, it did that and more. Now we're right back to where we were, actually above the price where we were when we looked at it on the 13th. And then check this out. I hope you follow this. And this is where I say that, sometimes trading fundamentals, if that's all you do, is really difficult. Toll Brothers is a builder, housing, interest rates going up, 30-year getting above 7% at one time. They're talking about, I read something yesterday that people that cover the housing market said that the housing market is frozen. That's what they said. And I don't know if that was a play on that big Arctic blast that we had or what, but check this out. It showed up. We looked at it and boom. I mean, great trade there. Hopefully you followed that one. It's a nice little Christmas bonus for you. We look at that one on the 20th and then there we are. I don't know if you want to stay with that or not. It's in a wave 3. We look at the DMI and the DMI still looks good. It still looks supportive. It's just one of those head scratching ones on how does it make any sense that it's moving back to the upside like this, significantly so, when the housing market is, quote, frozen by the analysts. So I don't know. That's why we trade technicals and we follow along with LA Wave and our confirming indicators. We do like to have fundamentals supporting our technicals, but we are primarily technical traders. And this is why, because you see stuff like this. And it's just hard to come up with some sort of a fundamental reason for a building stock to be going to the upside. But nonetheless, it did, and hopefully made some money out of that one. I think we're going to go ahead and close that and say that we've taken the gain there. And if you want to follow along, whatever, but I'm going to cross it off our TradeFinder list because it's done so well. So it only leaves 2, the Monster and Netflix, that you would still be considered in. So we close out so many things. Again, the record of TradeFinder from the case study considerations has been really strong. All right, so let's see if we can find one for tonight. Start first case study consideration for the year of 2023, and we have 5. Look, see, AWK is still there. Remember I said we weren't going to take that one off our list. It's just it got a little overbought, so we took the gain, but it's still there. And so we can go ahead and take a look at it. We got Abbott Labs, Floor Decor. That's kind of along the lines of Toll Brothers. What's going on there? I don't know. Let's just take a look at them and see if we can find one. So there's them. We know this one's good, right? So we're kind of where we were. We backed off. We're right back up to basically close today where we got out yesterday. And I don't think that any of the plan or idealization changes here. We want to see if it can break above this area. So be hard to use this one as a case study consideration when we close it out at the same exact point yesterday, waiting to see, can we break above this wave 3? Then I think you go long again. But for me personally, I'd like to see that happen first. I love this wave 4 right at the 38.2% fib level. But I say, let's keep an eye on that, which we are, and see if we can break above this level here at 160 meaningfully, and then we get back in. So that's kind of, again, there's no way I can make that one a case study consideration when we took it off for our alert subscribers. So here's Teradyne, turn the Elliott wave on. And this one now, when we look at the DMI with my search, I set it to where the ADX is moving up. You can see it's above the negative directional indicator, good separation between the 2 directional indicators, but the ADX hasn't broken above 20 yet, which is a key. That has to happen for us to go long on a directional basis. So you might wonder, well, why is it on your search then? Well, just for stuff like this, keep an eye on it. It looks like it's setting up really well, but let it trigger. I know the temptation is, well, look at that. It's curling up. It's going to break 20 in the next day or 2. But our subscribers know that we've shown it so many times that ADX can come up and it gets to 20 and then it rolls over. It actually has to break it. That's one of our triggers. It's one of our entry signals. It's not there yet. So this is another watch list one. So we don't want to do anything with this yet. We'll keep an eye on it. And I'm anxious to see this FND, see what that looks like with the stuff going on with Toll Brothers. And so we'll see how that looks. Put the Elliott wave on here, and still technically a qualified 5-wave pattern to the downside. So that's confused. Well, the ADX hasn't gotten above 20 yet. So we've got a couple here that are setting up. So we'll do some keeping an eye on them with Teradyne. and FND. We'll put those on the watch list, see what those look like. But that ADX has to break first. Abbott Labs. And that looks pretty strong to the upside there. No 5-wave pattern. So that's a good, strong impulse move. Now look at the difference here with the ADX. And you can see how it has broken above 20 there. So that one has triggered. And, you know, we might have a little bit of resistance ahead that we have to keep an eye on here at 115. But boy, if it can break that 115 level, we're good to go for probably all the way back to 130 to that previous wave. Well, now so let's see what the target would be. So it was 166% wave 5, which that means you look for a 61.8% corrective move, not all the way back to the previous 4. So let's see where that is. Well, we're getting close. Now that maybe that changes things. Well, we got a little bit of room and there's resistance there. So where are we? 113. So 116, 117 is probably where we're going there. It's not a big move, but it sure looks awfully strong to go there. So let's just keep that one in mind. See what Decker's looks like here. And again, stuff along the, wow, look at those zigzags. Holy cow. Look at that. Boy, if you were in the zigzag mastery class, hopefully you were on that. Well, look at that. So with 95%, 50% wave 4. So these are two good looking trades, but with small moves. So another 5% move to the upside here is what it looks like out of Decker's. Pretty supportive DMI there. So maybe we just put, why don't we just do that? We'll do a bonus one for the first one of the year. And we'll do 2 small moves, but note that they're both small. So Abbott Labs and Decker's, both to the upside, but both small moves. So we usually like to look for about a 10% move out of the stock for a directional trade. These are 5, so not as big of a move. So we'll 5% on the Elliott wave pattern here. So we'll look at those. They both look like they want to go higher, but we'll hit some resistance soon. So because of that, we'll put those 2 as our case study considerations for this week. And with that said, Zach, I will turn it to you. Got a couple extra minutes for questions to throw in there. A little bit of a bonus Q&A here for the first TradeFinder of the year as well.
Awesome. Thanks for a great presentation there, Rob. It's great to be back on the weekly routine.
Yeah, it is. It feels good to be talking the markets again.
Absolutely. I see we did have a hand go up here. Unfortunately, we don't do voice questions for this session with the limited time, but we do in the insiders meeting. So if you still have that question on Thursday, please feel encouraged to raise your hand. We'd love to hear your voice and interact with you then. All right. So this is just going back to the SPY real quickly. Obviously, you did your analysis on the daily. Larry would just like to look at the weekly.
Okay. And we did that last Thursday with our subscribers as well. So a lot of people interested in the weekly chart. Basically, we're going through consolidation here with that wave 4 right at 61.8%. So the key here is on the weekly, and again, you know, every bar is a week, so it's not as fast moving, but as long as we stay above 360 and hold that wave 4, you can lead towards being long here. But if it breaks 360, if the market breaks 360, then you have to relook at things because this 61.8% level is held for so long. But we're trying to make a little bit of a zigzag pattern here to the upside. Let me take all this stuff off that was on the daily chart. And you can see it looks like that's a qualified zigzag pattern here, right there. And it is. which would bring us up kind of in that area, 436 would be where we would be looking on the weekly chart. So, there's some interest in the market going long here, but the key would be, as long as we hold 360, if you wanted to be aggressive, trade that zigzag to the upside, you could do that. This wave 5 target, remember, that's the end of the year, so that's a long time away, but would tie into that forecast of a big rally out of the Qs. So looks kind of bullish on the weekly chart, so longer term looks pretty good.
Very well. We got some demand in here for gold.
Gold. Yeah, didn't do gold or oil, figuring that those would probably come in the Q&A as they usually do. And so look at that little doji there. Nice move. We'd looked at this before we went to, well, that's on the weekly chart. Let me get back to the daily. So 66%, still doji, interesting, but moving higher here, and it's really hard to not wait for this wave 4 to become disqualified. It does feel like it's time for a bid in both gold and silver. Might as well bring up SLV while we're at, well, let me finish looking here. I would like to see this wave 4 become disqualified, and then I think you feel pretty strong about a move back to 190 there on the GLD. So you can get probably disqualified around 180, and then you have a room to trade the GLD from 180 to 190 is what it looks like at this point. But as long as that pattern stays qualified, you have to have a little bit of concern there. But then you go to silver, and we've talked long and hard about who's the leader, gold or silver, and it seems like silver is now, who was the little brother for so long. But now it looks like silver is big brother, and we're consolidating right here around 22, and it looks like it wants to try to make a break to the upside. A little separation between the 10 and 50-day moving average is concerning, but this sideways move is helping to bring that together. So when you get separation there, it's the same thing as no security in any time frame gets very far away from the 10-day moving average. As you can see here, boom, every time we get away from it, what happens? It comes back to it. That's one of our rules. It's just always happens, whether it's higher or lower. You get too far from the 10-day moving average and it comes back. Well, the 10 and 50-day are the same thing. And so the sideways consolidation for about a month here has allowed that gap to close between the 10 and the 50, which then allows for some more upside. So it looks like the SLV is wanting to kind of churn here and then continue this upward impulse move. Just possibly a little bit of caution here on the SLV and the GLD. Both let them move back, let the SLV get back up to that wave 3 and look like it's going to take it out. Let the GLD disqualify that wave 4. And then I think you have something pretty good to the long side there on the metals. I think they're setting up for a pretty good bid.
Very well. Thanks, Rob. I'd just like to take a moment to remind everyone out there, if you enjoyed the webinar, don't forget to smash that like button for Rob.
Thanks. Appreciate that.
Here. Absolutely. The next one up here is going to be from Bruce for NVIDIA, and I believe we're going to have a trade review going out tomorrow on that one as well.
Yep, we have been still keeping an eye on that, because you can see we caught that move to the upside there, and boy, our timing on the exit, that's when we got out. You'll see that in the trade review, and then look what happened. But we're keeping an eye on it, and it looks like I wouldn't be surprised to see, something happen again on NVIDIA. So let's look at the DMI. We need that ADX to come up just a little bit, this separation to continue here, but it's looking awfully interesting. Note that we're at some resistance right here at 160. So we need to break above that. We are above the 50-day moving average, and it held today, actually moved a little higher. So I think that's a very positive sign. This one just feels like it wants to go higher, but you don't trade on feels, right? You have to have indicators. The wave 4 is held in there. 140 held, which needed to hold. We're back at 160. So we got out back here before, and you know, just as I said, it's spot on, the absolute best day to get out for our alert. So yeah, watch that trade review that comes out tomorrow. But I think you may see a new trade alert come out on NVIDIA here if we can get this ADX to cooperate here and show us that there is some strength to this move. This isn't just a test of resistance. There's some strength here. We get that ADX above 20, continue to drop that negative directional indicator. Maybe it takes a couple days, and then we may be good to go again on NVIDIA. So great timing on asking about that. It's something that you kind of like, go, you know, you're encouraging it to go because you know, NVIDIA can move when it wants to, and it's been hit so hard. A lot of upside potential, I think, on NVIDIA. So I'm rooting for it to get above 160.
Oh, absolutely. It's always a fun one to watch.
Yeah, I know it's one of your favorites too, Zach. So
You are correct. Chris from YouTube would like to have a look at CAT. And it says, I bought 250 puts this afternoon looking for a pullback to the 10 SMA.
Well, gosh, I've been, been waiting on the pullback out of CAT myself here, with this break above 240 being a little concerning. You know, but Toll Brothers moving higher. None of these make any sense from a fundamental standpoint at all. But it is a little bit overbought. So I would encourage you to be quick on the trigger unless it breaks below 240. It looks like the upside is where it wants to go. Why? I have no idea, but that's what the charts are showing. And the DMI is setting up to be supportive. I agree with you. It's a touch overbought short term, but that break above 240 was significant. And so you get back to the 10-day moving average, which it probably will in the next day or two. I would be quick to take a quick short gain on those puts. And unless we get some sort of a significant break below 240, but it doesn't look like that's going to happen. And by the way, not only is it a bit overbought, but you can see it hit this fib level too. So you got a couple things working in your favor for a short-term pullback. So good call on that. But just don't hang around too long with those puts, I don't think.
Yes, good call on the puts. And so we will
see what you did there. Oh man, is it gonna be like that this year?
That'll be the only one for the whole year. George here would like to look at Starbucks.
Man, we haven't looked at Starbucks in quite a while, I don't think. So gosh, with that Arctic blast, you would think they did extremely well. There was an awful lot of coffee and hot chocolate consumed during that week, especially up in the mountains. And they have a Starbucks in the local grocery there. There's not a whole lot of choices there, but they have a Starbucks in the grocery, and the line was like out the door. It was crazy. But you see right here, breaking above 105, I think is significant. Tiny bit overbought here, but we held 105 and bounced back. Pretty supportive on the DMI there. It looks like this one wants to go hit that wave 5 target. So I think you got a good one here. You know, it could move tomorrow. Maybe it consolidates another day or two, but as long as it stays above 105, I think you like your chances long there. And I think 115 is in its sights. It's a pretty good looking LE wave pattern. Again, this wave 4 that is more of a continuation of an impulse. So all that looks really good for Starbucks to continue to move to the upside. So I like that one.
Very well. Thanks, Rob. Next up, we are going to go with Charlie would like to know where FCX is heading next.
FCX, is that what you said?
Mm-hmm.
So Freeport McMoran is going to be kind of in the same area with gold and silver, and look at that move. So where's it going to go next? Well, look at the DMI. You couldn't ask for one better. I think it goes higher from here. Feel pretty good about that. Just feel like it's a bit overbought right now. So I don't know that I would go long tomorrow, because that's some pretty decent separation. But as long as it stays above this wave 3 right through there, and you can see a test of it would bring it back down to the 10-day moving average. So if it comes down a little bit, don't don't get too concerned about that. That DMI is as good as it gets. So very suggestive of a continued move because it's saying there's strength to that move, but it's a little vertical. It's overbought short term. So again, I wouldn't chase it long right now. If you're long, I wouldn't get out, but I wouldn't enter a new long position right now, not with this vertical move and being overbought. But I'd like to see just a little bit of a pullback here, hold above the 42 level. And then I think based on the DMI, you got a lot more upside to go there. So that looks great. Just, not in the next day or two.
Very well. All right, I'm going to throw a couple airline symbols at you. Let's do Delta and Boeing.
Boeing has had a heck of a run. We'll look at Boeing, and then Delta moving higher. Hey, again, it's all the cancellations over the holidays and stuff. I don't know, and don't get it. But the chart, the technicals couldn't be much better here. So whoever was asking about this, I think you're on another good one here. The FCX one looks great. Look at the DMI here. Delta looks great. Same scenario though. A little bit overbought. Let's see if Delta can hold this 36 level here, perhaps come back down a little bit, let that 10-day moving average catch up. I think this goes higher as well. At least the DMI again is they don't set up better than that. When you learn about the DMI, that's what you want. You want that picture if you want to go long. Slightly vertical, not too bad, but slightly vertical. It's just overbought. So FCX and Delta are both overbought right now, but both look like longer term moves to the upside. So if you can handle a pullback, then go ahead, or maybe just dip your toes in and add to it on any sort of a pullback. But they both look really good for going long. Here's Boeing, got a little bit overbought here, but look at that ADX. So it's super strong, but it's telling you the strongest part of the move is over. And we just have to be really clear on that. When you have an ADX that gets that high, it doesn't mean, it's not telling you the move is over, not until the ADX breaks back below 40. That's the indication that the move is over. Being above 40 like this is just telling you the strongest part of the move is over. It doesn't mean it can't go higher, and Boeing can go higher from here. Your level to watch here is 180. As long as it stays above 180, you can stay long there. But that just, it's gone from 120 to 210. So it's had a massive move to the upside here. Nice consolidation and break higher there. So, maybe it's not that overbought short term though. This is what happens when they go vertical. It's already done that. It's already come back in the past 2 days here. So I would look for it to hold above 200 short term. 180 is a stronger level of support, but if it holds 200 and tries to move back higher, we probably hit that wave 5 target at 240. So I think Boeing, it's getting there. It's been surprising the size of the orders that have been coming in for new planes, and that's one of the things that's propelled Boeing to the upside. And they felt like, okay, they're going to get past all their problems, new plane orders, all that kind of stuff is going to happen. But it's been surprising, like United made a massive order for new planes, and it caught everybody off guard. And so, business looks good for Boeing moving forward here after all the stuff they've been through the past few years.
Very well. Thanks, Rob. We have a couple requests for FUTU, F-U-T-U.
We looked at that one. Was it a couple weeks ago, or was it Thursday night? We looked at it. I think it was Thursday night, wasn't it? So down here, this would be something that we would kind of be looking at for our time strategy with this big drop, but it didn't show up. So the AI didn't like something with this one, and you can see it's had a bounce back to the upside. Now is where the rubber hits the road, though. So we're at a pretty good point of resistance, and it backed off yesterday from that level at 50. Eventually, this gap will get filled. When, who knows? But We hit the 10-day moving average on the high today. It's got to get back above that. So I think if you want to go long this, you let it get back above 50. As far as a short, man, there's just so much support in it, and it held, even though this 5-wave pattern is disqualified. So let's take that off. But look at all the support there at 40, at 35, at 30. So all between 30 and 40, there's tons of support, which led it to this bounce, but now it's at resistance. It's been range bound before. Maybe it does that again. Maybe it bounces between 40 and 50. But to go short, I think you got to break 30, and that's a long ways away. But to go long would be the path of least resistance here. Just get back above 50, and it probably fills the gap at 60 there. But it's got to get above 50 first, and it's got to get back above the 10-day moving average. So 50 turned it back yesterday, but not much. It's held in there pretty strong. Let's look at the DMI. And that's kind of non-committal there, not telling you much one way or the other, but these big drops like that kind of play havoc with the DMI. And you can see that was an extreme point low. Look at that. Oh yeah, that was a signal there of a likely bounce. We're heading back towards zero. So if the CCI breaks above zero and heads towards this positive 100, you could be back to 60. So anyway, I'd want to see if it can first get above the 10-day moving average, and far more importantly, get above 50. If it gets above 50, then I think you go long again.
Well,
no man's land right now, but those are the two levels. They're pretty clear, I think, for everybody to see.
I would agree. I see we are at time. As always, I'm happy to stay on as long as you are. So you tell me.
Flip a coin. Let's pick one more. And
one more? Well, why don't we close out the first TradeFinder of 2023 with good old Tesla?
How did I just had a feeling that was coming? Surprised it hadn't come yet. Well, let's take a look at it. So we had our gap up, and we've just stayed there. So this was the gap up. That's when we got out over the holidays, and we're right there. It's consolidated right there. So you can see how it's just blasting this tap box on the Elliott wave. The software just absolutely nailed Tesla. It has been, if you've been watching for past year or so. Elliott wave has been really strong on it. Consolidating in this area here, I think that this is just my opinion, not from Elliott wave, but that move was vertical there, and you know what I say, vertical stuff usually gets retraced, and so to retrace the vertical part of the move, we go back to 160, which I think is likely with Tesla. But we traded it on an oversold scenario. It gapped up. We had a quick, nice trade. It's consolidating nicely here between 110 and 120, which is encouraging if you're long Tesla, which I know a lot of people are. It's held the 10-day moving average 2 days in a row. So with any sort of a decent market, I think it's likely it makes a run back to 160. Then we'll find out. But that's just simply retracing the vertical part of the move. And as I said, that usually happens when you have a vertical move. It usually gets retraced. And so I think the likely next target for Tesla is 160, and then we'll have to reevaluate it again. So let's see how that plays out over the next week or two. Thanks again, everybody, for spending some time with us. Happy New Year. Excited about this year. Look forward to the weeks to come. Thanks for spending some valuable time with us, and look forward to seeing you again next